people joining in now. Our shared services and outsourcing and asset and supporting innovation and growth. This is our last panel discussion for the day, and I can very proudly introduce all our delegates to our esteemed panel. Bhavesh Jain, he is the Director for Global Financial Planning and CFO Shared Services with IDP Education. I've got Komal, CFO with Winlast Biotech, Vishal, CFO with Britannia, Rajneesh, CFO with Bomber India, and Neeraj Tandon. He's the CEO of Connect Business Solutions, who's going to be moderating this session. To our audience and the speakers, Connect is next gen, digitally enabled, dominant organization to help customers reduce cost to service, improves speed to market, stakeholder experience, accuracy, and compliance. The team at Connect, they drive digital transformation in this new normal through SSC, FAO, BO/MO. I would now request Neeraj to take center stage, introduce all the speakers, and get started with the session, which talks about shared services and outsourcing as an asset to support innovation and growth. Over to you, Neeraj.
Thank you, Shantanu. It's a privilege to be here and moderating this panel. Okay. So to the larger audience, I want to extend a very warm welcome to this discussion on our shared services and outsourcing and asset in supporting innovation and growth. I'm happy to share with you that we have a distinguished panel that brings a unique mix of skills and experiences, and they are all in very different stages of their shared services journey, right? So we have Bhavesh, Shantanu has just introduced everybody, but I'll just go over this quickly again. Bhavesh is, he heads the shared services for a multinational education company, IDP Education in India. Komal is the CFO of Winlast Biotech. It is a contract manufacturing company in the biotech space. Vishal Bhimani, he is, the CFO of Britannia's international business, and he has embarked on a journey of setting up a shared services center for himself. And Rajneesh Magan, who's the CFO of Bomber India Private Limited, and he's also in the process of, charting out a plan for optimizing his function. Okay. So I'm very sure that we will have a thought-provoking discussion. But let me just give you a little bit of a context, right? Drivers for setting up shared services or outsourcing the finance function are many. It could be reducing costs, it could be improving service levels, standardizing processes and systems, improved access to management information, managing growth without adding proportionate costs, and of course, accelerating automation, digitalization, and innovation, etc. Right. See, historically, if you look at the India shared services space, whether outsourced or captive, right, the CFOs in developed markets have led the growth, right? And as I said, and they have led the growth of ecosystem in India, partly through their captive centers and partly through outsourced centers. However, we have been seeing that domestic CFOs have been cautious and apprehensive about doing this. I think they fear lack of control, they fear service disruption, they're apprehensive about, whether there is a knowledge transfer risk. And of course, they assume that since it is shore to shore, outsourcing, the cost benefits may not be realized. Okay. But we have seen that COVID has somehow changed their outlook. 22nd, 23rd of March, there was a lockdown, nobody was able to get to work. And all of a sudden, nobody had an option but to shift work home, right? But the work did not stop, right? Statutory and internal audits happened, board meetings took place, financial results were announced. So it's my understanding, and that of many leading consultants, that the Indian CFOs are now willing to take a look at shared services centers and outsource. And I think it is the right thing to do, because it will be a pity if our own CFOs don't use the significant capability that has been created in the shared services ecosystem in India over the past many, many years. Not many are aware that options exist today to structure deals with their partners in such a fashion that it enables continued control If you do substantial rebadging, there might be a little knowledge transfer risk. And there are partners who can take over the existing operations, create a shared services center, deliver year-on-year cost savings, while assuring service and also automating and transforming the SSC to deliver business outcomes. So I would like to tell this to the CFO community that if they do want to take this journey, a lot of help is available. Okay. After setting up this short context, I think I would like to move on to my panelists. Maybe I'll start with you first, Bhavesh. You are heading the finance shared services for a global education company. Can you please tell us how has this journey been? What have been the drivers for setting this up, and how are the expectations changing from shared services center once you saved the initial cost, the cost arbitrage benefits have been realized? What are you doing next? And it'll be good if you can also touch upon, how did you deal with COVID? Was there a service disruption, or were you able to manage it? So look forward to hearing from you, Bhavesh. Over to you.
Thanks, Neeraj, and a very good morning to everybody. And it's my great honor to share this virtual stage with all the esteemed panelists and discuss insights on this key topic and give a practical perspective of what we have seen in our journey of establishing shared services set up in IDP education. So first of all, just begin with a brief background about IDP. IDP, as you know, is an international education consulting firm and a world leader in the student placement services, and a co-owner of high stakes English language test IELTS, and is headquartered based out of Melbourne and listed on Australian Stock Exchange. And we have a global footprint. We have a presence in more than about 30 countries with about 130 student placement offices, and IELTS testing is done in close to about 500 locations across 50 countries. And the countries were of, varying sizes of operations, And therefore, when we started this journey on shared services about 6 years back, we had a complexity of the operations to manage because of the global footprint. And we could not, typically establish a large finance teams across in a smaller markets, while we could do that in a larger markets. But obviously, from a cost benefit perspective, it would not make sense to establish, footprints of finance functions across many markets. Therefore, the ideal choice was to establish some of those key finance excellence centers in some of those geographies which can support other countries, So, yeah, it was a decentralized finance functions earlier, and a scalability of the finance team would be typically a challenging part because of the global, footprint presence, right? So the initial drivers for us to establish share services were like quite standard. What you mentioned, that we do not want to increase our finance function in proportion to our revenue growth, and standardization of process obviously is one of the key requirements, and the faster and accurate information available to the management is also another. So those were typically the standard drivers why any company would typically look at establishing shared services, right? Now, ours was a captive shared services unit, and therefore supporting an internal customers is a lot more challenging because the expectations are huge, and the the discussions on how to overcome the initial inertia, etc., would have been quite high, and therefore we had to tread very cautiously, right? And the background was that we had the India finance team, which was in some way had an experience of managing the India branches through a centralized finance function, but it was overall a very limited experience, right? So when we went ahead with our shared services journey, we started with that we put ourselves in the shoes of the service recipient countries, our customers, internal customers, that what would they expect from our side, So that's something which is very important, because if you do not strike the right chord with them, you would always have a challenge. And therefore the change management was something which was extremely critical to start with, right? And you have to showcase to the, the customers, internal customer service recipient units, that what is the benefit which they would typically get? It's not just an efficiency improvement, because then it would mean that are they not efficient? You have to show them that, look, you are on a level 1, and with a shared services journey, you would reach on a level 10. So that's typically the objective, which if you go ahead with, it's going to strike the right chord initially. Second part, we did not go with a big bang launch across the globe. We went with a slow and steady extension. So it took us about 3-4 years to do the support for the entire footprint of IDP. Right? Many companies do make that mistake of a big bang launch because they do not have a fallback option then, right? So if you go with a slow and steady, you can typically do a course corrections very fast, right? Then we also leveraged IT and digital solutions in a big way. A lot of IT solutions are like kind of in-house developed, very customized, which would suppose the specific requirements of IDP. And it has got a very easy payback and definitely wins a lot of support. And the approach which we went ahead was to convert an organization to a shared services support. We succeed or we learn, and that becomes a stepping stone to get into the next phase of delivery. Right. Throughout the journey, we had multiple learnings. Right. The failure was not penalized; it was regarded. It was rewarded because it would help us to do a course correction quite fast. Right. And then we have to take the fear out of our internal customers, because the key objective is not to reduce the headcount, not to save on the cost, but to bring in a higher efficiencies and the effectiveness of this particular unit. And then you also have to work of eliminating those key irritants to the recipient units, because they would not want to do something which they have not done. Like if there is a requirement to support or feed in the shared services unit through whatever scannings and other stuff, that would be a challenging. So we have to establish a process wherein from the source systems, we directly get the information in from a shared services unit, which then does not put the recipient entities into a disadvantage of something which they have not done. They have to do it now, right? You definitely need to have an executive champion who's going to be your torchbearer within the organization and which sets the tone at the top. That's something which is very, very important, right? And while standardization is the key, but what we have also experienced is that the customization for the local needs is something which is extremely important, because that's going to win the hearts, right? And also to understand that, there is nothing called BAU, so we have to do a course correction always. We never get into a BAU mode, because every day you have to improve from what you were doing on the previous day. Another key aspect is that although it's a captive unit, but you would definitely want to establish MOUs, SLAs, etc., with them, so that there is a clarity at both end of what is the, responsibility for which both the, teams are typically working. So that's something which is extremely important. And then the regular channel of interface between the shared services team and the customer team is extremely important, because that provides a feedback route. And it should not become that feedback is just restrained at the customer unit, not passed to the shared services for a value-added improvement. So these were some of those critical points which typically we took care of it. And finally, the resultant impact is in a 4.5 years. Now the entire shared services journey from a finance perspective is complete. We are now supporting about 30 entities from the shared services located in India. 30 entities are across 5 continents, different time zones, different language barriers, etc. And this shared services function is now considered to be a finance excellence center, supporting financial accounting, FP&A, management related, reporting aspect, and also, the local compliances, audits, etc. And a secretarial shared services support function is also established. We have also, established a lot of digital tools which help us to overcome the language barrier, because many of those countries did have, a specific language related aspects, and therefore we had to overcome to start supporting them. And the success in finance shared services laid the foundation for many other operating shared services also to be hosted out of India. right? And then it really helped us to lower the lead time for a lot of statutory changes like revenue recognition policy changes, lease accounting, derivative accounting, because you simply have to train a small number of teams in a shared services environment, and then you typically can cascade it down within the entire the structure of the organization, right? And therefore I can say that it led to a process oriented organization and not a position oriented organization, which is extremely important for a continuity aspect. So that's typically what is a journey which IDP went through, and some of those key aspects. Yeah.
Thank you. Thank you, Bhavesh. That was very insightful. I think there are great lessons there, that you could use shared services center, as a tool to support smaller business units, smaller geographies which can't really afford a full-fledged definite organization. And of course, another great insight I saw is that it doesn't matter whether you're running a shared services center within the organization or it's an outsourced engagement. You still have customers that you need to satisfy. You still can't expect them to do things that they were not already doing. You still need MSAs and SOWs signed up so that there's clear expectations, right? And of course, your point that if it is a digital-led service, it has higher chances of succeeding. And of course, your process-based organization versus people-based organization. Great insights. Thanks a lot, Bhavesh. So I'll now move on to Vishal. Vishal, you head finance function of Britannia's Global Ops, and you have taken the lead in setting up a shared services of your international operations in India brick by brick.
Yeah.
So how has this journey been? I mean, what challenges have you faced? What were the drivers for this? And have you achieved your goals? And I think your perspective is very, very, very important because, while you have made this happen, you're also the end customer of the shared services center that you've created. So I'm sure everybody is looking forward to hearing from you, Vishal.
Yeah. Good morning, everyone, and thanks for joining this webinar. I'm also equally, privileged to join this esteemed panelist on this virtual stage. So I'll talk about Britannia first. So Britannia, as I think, is a household name in India. So we are one of the largest FMCG player with having a more than 33% market share in the biscuit segment. We are the leaders, a number one player in biscuits in India. So back home, we manage about 90 factories, network of 4,000 distributors in India, 900 to about 1,000 vendors we manage. We have a team of 30,000 sales people, about 6 million outlets we cover, and about 50 warehouses we have. In terms of our international business, we cater to about 70 countries right now. In GCC, we are in the top 3 players, and we compete with international companies like Mondelez and McVitie's and Loacker of the world. So yeah, I have worked with throughout the FMCG companies in Dabur, Britannia, Colgate, and Eveready before. So I'll talk about my international journey and then with respect to the shared services. So it all started last year, basically. Earlier, our entire back-end transaction processing was completely decentralized. So when this thought came of centralizing this with our team in Bangalore, I was almost at a loggerheads with my boss, in terms of centralizing it. Because of multiple reasons, as Neeraj and Bhavesh spoke about. One was risk of service disruption. Second was I was myself very possessive about my team that they are the best in executing transactions and so forth. And third is in cross-border transactions, of course, the regional laws and regulations also play a very vital role. So I was not confident whether the shared service team at the Bangalore office can manage it. And then after continuous debate and discussion, we finally started working on it. So what we had been able to achieve in terms of centralizing our shared services is a payable function of about 300 vendors between Oman and UAE. All the wire transfers or check payments or advances or whatever, all kind of payments and invoice verification of the vendors has been completely centralized last year. Receivables from about 120 countries, which is 70 markets across the world, have been centralized. The entire payroll of about 600 workers and about 100 odd staff in the Middle East region has been centralized. All our legal agreements, outside India has been centralized to the back office in India. As you also know that we operate in the international environment, so the international environment, unlike India, depends on a significantly large contribution of modern trade. And in modern trade, there is a significant high cost input of visibility, shelf space, rebate, these kind of self-promotion expenses, which also has to be processed when they come up, from the distributors and the customers. This also has been centralized. So a lot has been centralized. Apart from these, Britannia started, the digitalization journey quite earlier in 2001. So our entire SAP masters, the IT services, the SAP support services, everything has been centralized in India. So the question is that what benefit we have achieved, out of this centralization of services. So to start with, first of all, I would, give a very famous quote of Franklin Benjamin. He said that a penny saved is a penny earned. And I think all the CFOs and the audience present here will resonate with that. So in our function in international business, in the finance function itself, we could cut down the fixed overhead by about 20% straight away. We could channelize our energy on more of core activities of the business, like, the profitability of the business, the whole business analytics on the business dashboard, whether it is pricing or the value chain or the material costing or the factory efficiencies, you name it, we could focus more on those areas. We could focus more on business strategies, expansion of the business, the growth of the business, our relationship with the customers, those things. At the same time, it reduced the regional influence. So, for example, when it was decentralized, even if there are errors in the documentation of the vendors, they could excise regional influence. Which now, when it is centralized, we can always tell them that these are the standard procedures. There will be no deviation. So that also helped us in standardizing things. At the same time, we could achieve a much faster transaction processing. As Bhavesh was talking about, it led us to efficiency in driving the transaction at a much faster speed than our own people could do it, actually, because they had multiple other occupancies. It was not the job description of only processing transactions. And now we have expertise, experienced team in India, which is only, specialized in doing things the way they do. So that helped there. Another thing which it helped is, online recording of the documentations. So earlier, all the documentations were kept, hard copies. Now everything is, digitalized and, available online. So how this journey has been achieved? The question is, there were risks like, process monotony. There were risks like the centralized team does not have enough regional and commercial touch. There were risks like, these were foreign laws, in the international business. So how did we achieve this? So I think I would put it in two buckets. There are two major pillars, basis which we could achieve this. One is the SOP creation on how, as is basis, the business is run, and what would be the way forward when it will be centralized with the shared service team. And second is extensive training to the shared service team. So we call the shared service team to Dubai and Oman, and we trained them enough for a month. At the same time, again for a month, my team went to India and spent time with them when the transactions, went live through shared services. On the top of this, we coupled this with a lot of digital initiatives like host-to-host payments and encrypted payments. So there is no manual intervention at all. As soon as you upload the payments on SAP, it directly goes to the bank server and then your payment gets released. So of course there is further need-based interaction with our team also, but these all has helped our business to improve efficiency, reduce cost, as well as bring quality to the whole service. It took us, in terms of timeline, I would say about 3 months, to implement this whole thing, and I would still recommend it is one of the fastest implementation we had. And in terms of audit also, this is more reliable, more compliant. So again, that is also an added advantage. Over to you, Neeraj. That's our journey of shared service centralization.
Thank you. Thank you, Vishal. That was, again, very insightful. I think to the financial controllers, CFOs who are listening to this, there were signs of, you often think on where do you start journey. And I think there are clear indicators that, payables and receivables are the first places you can pick up as you start your outsourcing journey. Of course, he has done payroll and legal agreements as well. But what was very good to hear is that he, before he started, Vishal himself was against it, right? He didn't want centralization till he was. Till he saw the benefits. He spoke about 20% cost reduction. He spoke about focus on core and therefore enabling the organization to focus on business growth, which is, part of our topic as well. So these are, and standardization, faster transaction times, these are great things that usually happen, which are kind of outcomes when you start on a journey of shared services center. Thanks, Vishal, once again. And I think I'll now move on to Rajneesh. Rajneesh, as I said earlier, he's the CFO of a German multinational in India. And he has not yet created a shared services center or outsourced yet, right? So Rajneesh, could you please share what opportunities are you looking at to optimize and modernize the function? And are you planning to work with other partners? Tell us, what are you planning to do, with your function, Rajneesh?
Neeraj, I think Rajneesh is having some trouble logging in. So I'm still. So the team is still talking to him. Can somebody else pick the question, please?
Yeah. No. Maybe we'll wait for him because I think the question is contextual and talks about his journey. So maybe I'll move on to Komal with a different question, and we can come back to this when Rajneesh is back.
Sure.
So Komal, you worked at multinational companies for a large part of your career. Right? And now you are heading the finance function for an Indian promoter-led contract manufacturing company in the biotech space. Can you please share with us what are your priorities, for optimizing and transforming the finance function for Windlass? And, whether there are any nuances of doing it for a promoter-led company versus doing it for a multinational?
Sure. Thanks, Neeraj. And thank you everyone for joining in. I'm glad to join this panel. So basically, promoter-led organizations definitely are very, very different as compared to MNC environment. They are different in terms of decision making. The decision making in a promoter-led organization, I would say, is much faster. Then second example I would give is to a set process. If I want to make a change, I want to propose a change, that is, I would say, very, very, in comparison, easier and faster process in a promoter-led organization as compared to MNC. How? If it's logical in MNC environment, sometimes I would actually take the liberty to say that even though it is the most logical thing to do, in MNCs people would be a little resistant, a bit, they would take time to approve any change in the set process. As compared to in a promoter-driven organization, if you are able to convince them in terms of, in terms of the change environment, how that change makes sense, they would be willing to actually sort of look at that and easier to implement there. Now, that's a good thing. But at the same time, what happens is this easiness and this speed has its flip side also. So you would see that there are a few people in the organization who would like to take this opportunity to overcome, or to surpass the existing processes, to reach, whatever they want to do. So they would sort of do a sidebar within the organization and make changes to the existing process. And what will happen is you will end up having more exceptions to any process than you would really want to have. So that's basically the difference. So in my personal journey, when I decided make a change from a MNC kind of work environment to a promoter-driven organization. That was in itself a big sort of, I would say, a personal challenge that I sort of took. So for doing that, then the best thing when I joined in Windless was that the management was really willing to bring in changes. They were open to any kind of change, the organization to go any change, to go through any changes, and was, with open arms, they were actually willing to do that change, and that is why, they sort of brought in a team or a CFO from a MNC environment. So when we started our journey of this improvement and transformation within Windless, what we started off with small low-hanging fruits like ERP upgrade. We started using the modules that were available, but we were not using. Then we found out some critical activities which were being done manually instead of so we tried automating them. Simple things like inventory valuation or analysis of material margin, customer-wise profitability, things like these were manually handled. So we started focusing phase-wise. We took each activity, we started automating that. To the extent possible, we outsourced the portion that, for automation, one by one processes. So we kept on, doing this stuff. After that, what we did is, then we thought that what we are missing is a governance structure. So having a set processes in place, the processes were there, but were not really exactly followed as they were not documented in the first place. So we started forming a governance structure. We formed various work groups with all the stakeholders. We did the alignment. We decided the duties and powers of these work groups. We decided the frequency of their meeting. We said that, we need to have this governance structure in place through which we agree on what are the critical processes, how, what we are doing, what are the things that, are good that we are currently following, what are the things that we need to probably change, what portion of our existing process is something that we would, want to not have internally, what of it can be done through someone else, either whether it makes sense to internally have someone appointed to take care of that activity, or my current team can be trained to take over that activity. What are the activities which are probably not necessary but happening there? We found out that there were several activities, the doubling was happening. There were various teams who were handling those activities. They were doing it, and then there was another set of people who were actually spending time reconciling why there are different numbers coming from different people. So we were able to find out several such things, and then we said, okay, so we need to, as a whole, work on all the processes, decide what we are going to do, and obviously prioritization in terms of. So I think over a period of about 5 years, we have slowly worked on, picked on things, worked on them. So like statutory auditor, we said that, having a local statutory auditor, it's something that is not probably doing a value add. So each activity that we were doing, we said, let's shift to a renowned firm. Then internal audit, sort of we were doing it for documentation purpose. So we said, no, this is not done. We need to use this activity for bringing in more efficiencies, making improvements in what we should do, and also in deciding the prioritization in terms of what is more important for our organization, for our management. Then we had obviously PE investors also coming in. So I was part of the PE investment. I was also part of the strategic investment with Cadila Healthcare. Investment as well as the divestment piece. I was part of that. So it was actually a very interesting mix of people to work with. So we had PE investors, we had strategic investors, and then we had Indian promoters to work with. Everyone had their own strengths, the viewpoints that they were coming from, and then making sort of taking the good things, but also having a discussion with them to make them understand where we are coming from, what the changes that we are speaking, how they will bring in what is a bit missing in our organization. So I think we did it for a in a very good phased manner. We started doing stuff, we started proving the outcome, how it is helping the organization. Then we took the next step. So we took baby steps, then we had sort of backing from everyone, and we started doing it. So I think finally now we are at a stage where we are ready for another big leap of transformation, and in our organization. So my plan now for my organization to do, to take this big leap would be, obviously, I think the main answer to this is outsourcing. So there are three categories in which I would, sort of put in the category. These are the three categories in which I would like to look at outsourcing. So first category would be a kind of niche activity where I feel there is a whole lot of expertise available outside. There are specialized firms who are providing these kind of services, which is available at obviously at a very good cost than I would be internally able to do, and much speed, higher speed than I would be able to deliver, or my team would be able to deliver that. So these kind of activities would be probably dashboard building for various set of people in our organization, in management, the board, investors, promoters, what they would want to see. And so the whole dashboard automation piece for that is something that I would like to outsource. Then there is legal, recruitment, and so these kind of activities. Then there is second category of activities which I feel is operational, or I would say repetitive in nature, which my team is handling. I would like to free up my team from these kind of activities, which can easily be get done from outside, and this team then can actually focus on analytical activities, strategic decision making. They can do that support on the ad hoc tasks or the M&A transactions that we are willing to do, acquisitions, as well as fundraise that we want to do. So there are several category of activities on which I would rather have this team spend their time, who know the organization better, who have been with the organization. I'm not necessarily looking at sort of cost reduction in there, but I would rather have them spend time on these activities, and have that partnership with business and management to help them with our insight. So that's second. And then there is third category of activities, the core activities. Also, I would not say that I am necessarily sort of closed to have those also outsourced. We can also look at them, but honestly speaking, it depends on the success of first two categories outsourcing, the kind of result that I'm able to bring in, and the kind of experience that I had. Then the third category would also be good to see. So that's all from my side, Neeraj.
Thank you, Komal. I think this was a very, very different perspective from a CFO, and the process that he or she undergoes before he decides to outsource. So of course, they were. It's good to hear that promoters-led companies actually decide faster. And it is true, right? If everybody agrees, you can get stuff done pretty quickly. And it is good that you started by doing the essential things, getting the business ready to start looking at outsource. You set up, you did ERP upgrades, you automated, you set up a governance mechanism, you looked at what the teams were doing and eliminated duplicate process steps, right? And that did better work prioritization. One thing that was very clear is that you said that you took baby steps. And I think this came up even in Bhavesh's session, where he said that, if you take baby steps, if you start small, you can go about it in a risk mitigated fashion, and that sense of risk is low. And of course, I like the way you're looking at outsourcing. One, of course, is, you're looking at outsourcing niche skills where, I would call where you believe you have a skills gap in the organization, right? And then obviously non-value added repetitive steps so that your team can focus on the important and value added stuff. Those are great things. And I think we should now move on to another important piece in our topic of discussion, which is transformation, automation, digitalization, right? I mean, when if you look at what the leading researchers in the market are saying, or what leading consultants, McKinsey's, BCG's of the world believe, there are two great things happen when COVID broke. One, the two within the outsourcing world, two most spoken about things were, one, work from home, and second was digitalization and automation. Right. So either people focused on making sure that there was continuity in work by pushing people work from home, or trying to automate so that that work was eliminated completely, and and a machine could do it. So it would be great to get your perspective on how have you dealt with this phase. So Bhavesh, let me come back to you. Can you can you share with us what have been your experiences with digitalization, automation, innovation? I mean, all of those things, and what recommendations would you like to make to the wider community that is listening to you today?
Yeah, Neeraj, so I think that's a great question, and it's something which is currently debated quite a lot, And before I get deeper into that topic, one very good saying from V.I. Lenin about 100 years back, which is so true in current times. What he said, that there are decades where nothing happens, and then there are weeks where decades happen, and we all have experienced that in last 6-7 months. So many of the companies which were in a evaluation mode on a automation, digitalization, taking years to decide, in the span of 5-6 months, they would have done something which they wouldn't have even thought of doing in a span of 5 years, So it's such a great migration, So like they say that many times things happen through evolution, but sometimes things do happen through a revolution as well. And the COVID scenario is nothing short of a revolution, I would say. In terms of, shared services, support into an overall strategy of digitalization, automation, digital transformation, I think what is required to be thought through is the organization mindset needs to completely change. If they look at a shared services just as a support function, as a back office operation, then it's going to be extremely challenging, because then it would just remain as one of those units specifically tasked to do a step 1, 2, 3, and they will not become a strategic part of it. What is important is that if an organization is evaluating on going on a digital pathway, to integrate shared services in the way the things are being managed in an operations perspective, a strategy has to be evolved, keeping in mind that the shared services at the center of things along with the customers, So that's something which is extremely, extremely important, right? Now, we have seen with the COVID situation that overnight there were lockdowns, not only in few countries, but across the globe, And those companies which had existing shared services set up had actually fared quite well, So especially talking about an IDP, we did not even lose one mandate in terms of a disruption. And earlier we were like kind of managing the accounting and other finance related activities for 30 countries centrally here from Delhi. Then what happens is that those staff members went to their hometowns, and now that entire 30 countries finance and accounting operations is managed not from a central area, but maybe a journal entry is posted in Indore, and then the finalization is and the final confirmation of the entry is happening from Lucknow, because maybe the resource is based out here, which clearly shows that how a digitalization automation spread can typically support an organization, So that's something which is very important, and therefore it only is possible once you take a shared services in a like as a core function, as a part of a strategic input, So that's something which is extremely important. Shared services do become a bridge between an expectation and a reality in your digital journey. So that's something which is extremely important. And once we go through this COVID ends, there will definitely be an affordability pressure, and therefore a lean model with a shared services bring is going to be one of a very important aspects, right? to be there. In terms of specific on the digitalization, automation, see again, shared services, a concept like robotic process automation, predictive analysis, cognitive platforms, smart contracts, etc., are something which were not new to a shared services, because they have to enable those kind of functions for their effective discharge of their responsibilities, right? And therefore, for a shared services to become a business partner, be part of a digital enabled journey, it has to be a very clear strategic mindset which has to be there, and that would take them into a core function. So that's what my view in that is. Yeah.
Thank you, Bhavesh. Decades did happen in weeks. 5-6 months ago for all of us. And I think there are two things that were very, very important in what you said. One you said is that, the value of shared services in a crisis situation, because you were in a shared services environment, you were able to kind of shift work from home in no time at one location for multiple countries, and nobody served any service disruption, right? I don't know how these countries would have behaved if they had not created a shared services center already. And second is the value of automating and automation and digitalization as a means of creating an efficient shared services center. I think these are lessons for all of us. Thanks very much. And let me just move on now to Vishal. So Vishal, I'm sure like everybody else, you've also embarked on a digital journey. But, there are a couple of questions I have for you. One, of course, is, do you believe you have realized the anticipated benefits from digitalization? While people keep talking of digitalization, the honest answer is that when you look at companies that actually realize the benefits were not many. So I would like you to address that for all our listeners. And secondly, when you embarked on the journey, why benefits are not realized is also partly because the organizations themselves don't have skills, automation, digitalization skills. So please help, tell us about your journey and how were these benefits realized?
Yeah, Neeraj. So to answer that whether we have realized the anticipated benefits of shared services and digitalization, I think there can't be any simple answer of yes or no to that, because I think that the digitalization journey for any company should never end. I think it should be constantly evolving journey, and it does not have any end to it. I mean, who would have imagined maybe 30 years back that for a simple business issue, you can send an email and, get the other person communicated about it? Who would have imagined 30 years back that you could just a click of a button, you can order a pizza online? So I think we are living in a world where anything can change and, evolve. So in terms of our journey, in terms of digitalization as well as shared services, the benefits which have already accrued, I already spoke about it. Like centralization of the payments, collections, payroll, legal agreements. In terms of digitalization, we also achieved the host-to-host service through which payments are encrypted, claim processing, masters, etc., etc. What we are further looking forward to achieve going forward is, just to give you a few examples, like our vendor invoices from about 300 vendors across the world. Still, of course, they are being verified by the shared service team in Bangalore. But who would send those invoices to our shared service sitting in Bangalore? So they are sending it, of course, still as continuing to send these invoices to our offices in UAE and Oman. So, of course, somebody has to scan those invoices on our SAP platform, and then it would go to the backend team in India. So somehow, if I can give a platform to our vendor itself, and they can themselves, send these invoices to our backend team in Bangalore, of course, that will be another milestone and feather in cap in terms of digitalization, and it will reduce, the transaction processing time for my team here in the Middle East or in the international business for say. So we will be looking forward to platforms like Ariba for procurement to pay cycle. Coming to collection, for example, already are the collections, once it sits in our bank statement, somebody from the shared service picks it up, and on the same day he posts it in the SAP system. But I can look forward to automizing that to the next level also. So for example, if I can create a subledger for each customer under my master bank account, so system should be able to understand that if it is coming from this particular subledger, it is relating to this particular X or Y or Z customer, and it should post the entries automatically without even a shared service resource doing anything on that. So I'm now embarking on a journey of that level of automation. Similarly, the bank reconciliations, for example. In terms of MIS reporting, now we will be working on tools which our India system is already using, like Business Warehouse or Tableau, and improve our reporting systems, which to a certain extent are still manual today. In terms of our key ERP software, we are now upgrading from SAP to S4HANA, which is the best SAP system in the world today. Very few organizations in the world have still adopted it. And in Britannia being one of the large cap in India, it is part of the Nifty 50. So it has to lead by example. We are already working on S4HANA implementation in terms of upgradation of our system to the next level. So all these things we are doing, but it will be a constant journey for us, Neeraj, is what I want to say. It will never end.
Thanks. Yeah. Thanks, Vishal. So, as Vishal said, automation benefits are always a shade of gray. They are never completely white or black. And, of course, it's a constantly evolving journey. So, irrespective of what shade of gray you are in, you must kind of continue to move forth on the journey and keep trying. Okay, so Komal, this brings me back to the next question for you. What would be your preferred option as you look at your digital alternatives? Would you do it yourself, or won't you rather give the transformation responsibility to an outsourced partner and hold him accountable for the process outcomes?
Sure. So Neeraj, for me, I would say it would be a bliss to have an outsourcing partner who is ready to take an accountability in terms of the whole transformation process that we are talking about. So I would like to think that the outsourcing partner that I am dealing with has much more expertise, have seen so many companies of various, having different, so like large organizations, smaller organizations, the kind of environment that these organizations are in, the stage where they are in the whole automation piece in their journey. So they have seen that they know what are the best practices, and they might be the better people who would help us make a decision in terms of what are the best practices for that suit our organization. What is it that we should go for? What portion of our processes we should, are good and we should continue? What is preferable to change according to them, and what portion is like completely no, which is very dangerous that we are doing currently, and we must change. So those kind of insights coming in from an outsourcing partner who has already sort of done it all in that sense would be a very good thing to have for us. But at the same time, I would say that complete shift of accountability, I don't think is it's doable or is a good thing to do. It has to be a joint accountability, but the joint accountability, I would say, where both are equal partners, instead of generally where I would see that outsourcing partner in terms of transformation has a lower role to play, but in terms of execution of what has been agreed, there he plays the bigger role. I would like that right from the beginning, where we agree on what needs to be done, the whole transformation process, both company as well as the outsourcing partner are really equal partners. Both of them are doing it together, and that's why they are holding it, they are both accountable in terms of the ultimate goal that we are reaching. And companies should be actually willing to go a bit overboard in terms of if we are able to achieve that the cost benefit that we are going for, then we should be able to share that cost benefit with this organization, where then that is the way to bring in the joint accountability.
Okay. Thank you, Komal. So, Komal says you don't necessarily have to reinvent the wheel because some of your service providers may have better expertise, experience, know the best practices, know the platforms, etc. But again, what works best is that if you're not looking for just a service provider or a vendor, you're looking for a partner, and you kind of shake hands and roll up your sleeves and do this together. I think those are great lessons, Komal. So I think we have come to an end, or the time is coming to an end. We may have little time to take a few questions, but I just wanted to end with, in the beginning, I did not introduce ourselves. I'll just take a few seconds. So I work for Connect Business Solutions Limited, which is India's leading digital-led business process management service provider. And with 30,000 people across 26 all delivery locations in this country, we are providing shared services, transformation services to a large number of domestic and international partners. And it doesn't matter where an organization is in its transformation journey, whether you still work out of individual departments and want to set up shared services centers, or if you have set up shared services centers and you want to now make them more efficient, improve their performance, etc. Or you have also done this and now you want to transform, automate, and get significant digital benefits. I think we could perhaps help. We have helped our clients in their journey. And I think with this, we come to an end and we are happy to take questions. Shantanu, are you going to lead this?
Yeah, Neeraj, thanks so much. This was quite insightful. I've got a couple of questions. So I'm going to club these two questions to one. It's being asked by Manoj. It's not a pointed question, so anybody from the panel, I'd request to pick this one up. What one should be wary of while setting up a shared service, especially for a company which has recently started its operation?
Yeah, so
Okay.
if you want to,
Avish or Vishal,
yeah, sure. So I'll just take that question, Shantanu. So I think what is important is for a startup, if they get into a journey on their shared services, they have to ensure that because startup has to be a lean organization, they have to take care of their financials quite a lot, right? And they also have to ensure that their processes and systems are evolving. If they get into a shared services setup with a standardized approach, then what they would be doing is that they would be binding themselves to a standardization module, and which would hamper their growth prospects. So they have to keep an eye on their growth and also ensure that their systems and processes are definitely evolving, and therefore their shared services journey has to also evolve according to their business, according to their business evolution. That's something which is extremely important. They should not be bogged down with a standardized. At the same time, they should also ensure that some of those best practices with the shared services environment they start imbibing those best practices right from the day one. That's something which is extremely important, because sometimes it can happen is that they would, in the growth prospect and running after the growth, they may compromise on their controls. That is something which they have to be very clearly aware of, that those standardized processes and the control aspect with the shared services brings should enable them to set up a controlled environment so that they can mitigate that risk. So that's my view on that.
Okay. Thank you. Vishal, this question is specifically for you.
Yeah.
Rajat is asking you, what is still a pain area that is not standardized to an extent that it cannot be outsourced?
Yeah, so I think I partially answered it in my previous question, but I would still elaborate here. So, for example, MIS reporting is still a pain area which is still not standardized. It is still, to a large extent depends on manual intervention largely because of the complexity of business. Because we have a factory in Oman, we have a factory in UAE, we have a lot of contract manufacturers, we have a factory 100% export-oriented unit back in India also, which is serving the international market. We have a lot of contract manufacturers sitting in India who are serving the international market. We have a lot of intercompany transactions also, for buying goods and selling to a third party. So very complex business, because we are present in about 70 markets. So our MIS reporting, despite having a robust SAP system, is to a large extent manual. So that is an area probably not standardized, and that is an area which I cannot leave it outsource also, because I want to exercise a far higher level of degree on it. So we will be looking forward to working on tools like Business Warehouse and Tableau, or so some kind of automation we will be working on going forward in the short term to have control in this area. If I have answered your question.
Thanks, Vishal. I think you've sufficiently answered that. There's a question, again, an open question. I would request any of the speakers to pick this up. How efficient the statutory audit handling from shared services center located outside the country?
Yeah. So go ahead, Komal. Go ahead, Komal. Go ahead. Yeah.
Sure. So in DSM, actually, we had our shared service center based out in India for the whole global operations. So I would say that the whole statutory audit process was actually smoother when, in Hyderabad, we have our shared service center of DSM. So the whole process of statutory audit that used to take, so ENY was the global auditor for DSM. So the whole process used to generally take for my organization was about 1.5 months for every organization, which was actually reduced down, although the people sitting in Hyderabad and people sitting of EY office abroad were working with each other. But the time was actually reduced to 10 to 15 days per organization. That kind of, sort of 1/3 of the time is the kind of efficiency that we were able to reach, because, everything is actually available, already documented in a particular fashion to be able to locate, and they had to anyway share the piece with our organization. So we were much more organized, I would say, through a shared service center, and more ready to face any kind of audit, be it statutory audit or internal.
Awesome, Komal. Bhavesh, the next question is for you. Is accountability, in your opinion, being compromised with shared services centers?
No, because there has to be, even if it is an external shared services or a captive unit, I think what is important is that in some formal way, you definitely have to document the responsibilities of both the parties, right? So be the service recipient unit or a shared service unit, their accountabilities have to be fixed, cannot be open-ended, because that can lead to conflicts, can lead to some of those, issues getting missed out, ball getting dropped. So once that is in some or the other formal shape, it is documented, you can definitely, put in accountability, right? But what happens is that you have taken off transaction processing away from the point where the transaction gets generated. That actually puts in a lot more control in place, because it's just like a kind of two-way match, or just like kind of split of maker-checker concept is there, right? So that is established. So my view is that is you can actually put in more controls, but you need to have a very robust process, perfectly working, and you need to elaborate that the process is working fine and you can pinpoint. So my view in that is that if you have that completely documented, you can pinpoint a responsibility, and it actually improves your control processes in a much better way.
Bhavesh, a follow-up question for you from Chetan. He's saying you mentioned about secretarial shared services. Can you please tell us more about that? And what exactly was managed from secretarial shared services?
Yeah, I think a good question, because we have been talking about a finance shared services, and a secretarial shared services is something which is still quite a nascent concept, and a sectoral shared services being managed from India for across the globe entity is something which is very few organizations would have done. So what we have done in IDP is that we manage the secretarial compliances, which is for all the subsidiary entities of IDP from here. And we have created an in-house, a global compliance management tool, which is also a database management tool for holding all the secretarial, the templates and all the compliances which have been done. And this is developed in very co-design manner with country teams that look, what are your secretarial compliances which you have, right, for one particular financial year. We have listed down that completely for each and every country where we operate. So it then creates an alert that look for this country, like this entity which is based in Egypt has got these, 6 different compliances at different interval of time. It will start giving an alert to a secretarial shared services person here in India and also the country finance team, and those secretarial shared service team would then typically support the country teams to undertake those compliances in a timely and accurate manner, which would also lead to a standardized document set creations, board papers for the local entities, and then appropriately filing it off, and would give us a early feelers if there are going to be any miss on the dates, or if there are going to be any issues which are going to happen with the local company registrar offices because of delays, etc. And another benefit which it provides is that it gives us a central database of all the company secretarial compliance across the different locations we have, right? So if we have a 45-50 different entities across the entire globe, it will give us one central point where all the secretarial compliances documents for all past years can typically be available, and then would also give us a diagonal slice functionalities of like this particular person, whether it's a director in which all entities across the globe, or can you give us a chain of the directorship of a particular entity right from 2010 till date. So those kind of functionalities can also come out. So I think that's the concept which secretarial shared and provides us a huge benefits, because you don't have to duplicate the teams across the different locations, and you have one centralized team fully empowered working with the country finance teams to undertake that.
Thank you, Bhavesh. Neeraj, I think the next question could well be answered by either you or Komal. We today have capability to manage end-to-end sales and order booking across the supply chain for FMCG companies. Do you think FMCG companies would be ready to outsource this key area?
Can I take this question, Santanu?
Absolutely.
Yeah.
Yeah, I think this can't be more relevant than to FMCG business, and so it has to relate to us. So,
as soon as you said FMCG, he was like,
let's hear Vishal. I also have a few things to add here, but after Vishal.
Rajat question is in demand. Go ahead, guys.
Yeah. So in India, back home, our processes are quite standardized in terms of order booking, and then supply chain planning is completely automated. Now coming to international business, where we are working in 70 countries and with 120 customers, every customer sends their orders in different formats. So in India, basically we are a make to stock company. So we work basis of forecast, basis of consumption pattern, because we have far better experience there. Whereas in international business, we are make to order. So when the customer sends the order, then the order planning starts. So from these 120 customers, I received the orders in completely different formats, different SKU combinations, different coding, etc. And if somebody at the in the Dubai office has to manually punch all those things in SAP, and then it goes for the production planning to the supply chain team. And of course, all those things can be automated through software development, that a particular SKU code combination, if it comes from a particular customer, it has to be read in a particular way. And then it has to be automatically uploaded in SAP, and it has to be, processed for the materials planning, the production planning, etc. So we are working on that. Again, in terms of the entire P2P cycle and the order to cash cycle for my new geographies where I'm expanding my business sitting here in Dubai, markets like Egypt, markets like Uganda, these are all new geographies of strategical importance to Britannia, where we are planning to grow the business through a third-party partner, contract manufacturer, without putting a single headcount in those markets. Everything will be managed end-to-end from here, from Dubai. Only there can be a sales manager based there to execute the business. That's all. So that kind of level of outsourcing we are working on in new geographies also.
Brilliant. So Bhavesh, Komal, Neeraj, do you have got points?
See, I am at this point in time not very clear on whether he's talking of the process when he takes end-to-end outsourcing of the entire SCM which basically means, the process of day-to-day management of placing orders on your suppliers and day-to-day process of picking orders from your distributors, retailers, etc. If my understanding is that he's talking of that process, and my response to him is that several FMCG companies are thinking of doing this, right? They would ideally not want to have these plethora of sales guys in the field going from retailer to retailer picking up orders when these retailers are your regular customers, and you can talk to them over phone and take the regular orders and make sure that they get delivered, because if you are an FMCG company, your retailer sources from you on a regular basis, weekly, daily, monthly, whatever, right? So I think it can definitely be done, but it is the lifeline of FMCG companies. And my take would be that even if they would try to first do a pilot. If you are able to do this on a scale of 50, 100 people, demonstrate that, those retailers still continue to give the same amount of business or more, then I think they will easily scale up. But a short answer is that, yes, lots of companies are looking at it, but they would want to make sure that you can actually execute.
Okay. Komal, I've got a question for you. This is from Manoj, and he's saying that I'm a promoter-driven organization. How to cut the paths through the minds, as it's very difficult to imagine on which side the promoters will fall back.
Sure, that's an interesting question, I must say. So, I think the mindset change in itself is a journey, and it's obviously when when there is a change that you are talking about in an organization, the people who have been associated with the organization, they have given their lives. So like we have people spending 25, 30 years, 35 years with the organization. So they, the company belongs to them as well. And they don't like the sudden change sort of coming in the organization, being introduced, especially from fresh. And they are talking about the changes, and promoters are backing them. They don't sort of necessarily like this happening. But the way to go, I think, is to involve all these important people in this journey, having their buy-in. So having discussions with them, sort of getting inputs from them in terms of what do they think is the are the areas where we need to look at, what are the areas where efficiencies can be brought in. Do they think that whatever changes are happening outside, or the examples where it has been a success, will that suit to this organization? What is the way to do it? And if you sort of over all these discussions and forming work groups where you are actually giving them power to be involved and to actually drive the whole transformation journey in some sense for their own area, and you are making them responsible to ensure the success, that is probably the best way to cut through the mindset of being and I think the thing to do this is to not really the people who are wanting to bring change, not really worrying about the credit. That I think is the way to go about it. That's the best way I would say.
It's amazing, Komal. Thank you so much. On that note, I know we've stretched beyond permissible limits. We've gone over an hour and 13 minutes now. Bhavesh, thank you. Komal, thank you so much. Vishal and Neeraj, this has been a great session. I really think our listeners would have been thrilled listening to your views on shared services outsourcing as an asset in supporting innovation and growth. Are there any final concluding notes? Or could we just end here? I have a couple of more questions, but I think this can go on forever. So I'll probably send across an email to each of the speakers with follow-up questions. But if there are any concluding remarks, then now's the time. I really enjoyed myself. Thank you so very much.
Okay.
Thank you, Shantanu.
Thanks.
Thank you.
consulting us.
Thank you,
Bye-bye.
guys. Thank you so much.
Thank you.
Bye,
Thank
everyone.
you to our listeners.
Bye.
Hope you had a great time, and I look forward to seeing you soon for the next CFO Engage series. Thank you. Goodbye.
Thank
Look
you.
forward. Thanks. Bye-bye.
Bye, everyone.